Michael, welcome to this episode of Adapt and Thrive. How are you?
Good, Dahlia. Doing well. Thanks for having me on.
Fantastic. Michael, for those who don't know you, tell us a little bit more about yourself as an investor. Um, what strategies you've used today to build up your portfolio, which areas you've been investing in, and a little bit about yourself.
Yeah, sure. So we've been investing for about 14 years so far. Started buying when houses were a lot cheaper. Most of our portfolio has been built in the last 4 to 5 years. I'd say that's when we really surrounded ourselves with the right team and scaled. We've done mainly burrs, so duplexes, triplexes, a sixplex. We've also recently invested in a cottage to get into the short-term rental game. Definitely been enjoying that. And I did leave my full-time job recently, earlier this year, to focus on investing full-time. And for the last 2 years or so, I've also been coaching with Corey McKinnon and his team. He's a well-known investor in the community and just been having a great time sharing my knowledge and giving back to other investors in the community.
Amazing, amazing. Really looking forward to get your perspective today on several things leading into this environment that we're in. One of the things is relating to existing investors who own portfolios. As we all know, the rates have gone up. They've gone up at a pace, at a fast pace, and to be honest, above expectations. Like we know the rates were going up. We know eventually the rates are not going to stay low. But I think today I read a statistic that says that Canada has been one of the most aggressive countries in raising interest rates within the G10 in terms of pace. So obviously that has an impact on investors, and cash flow is a big topic right now. It's depleting cash flow in some cases. So with your students, for yourself, what are some of the things you're doing right now to help minimize the hit on cash flow or to tweak things so that you can continue to receive cash flow from your portfolio?
Yeah, we're definitely in interesting times that some newer investors haven't experienced before, right? So they're kind of learning on the fly, and they're reaching out to other people in our group for advice. So it's so important to protect what we own already in the portfolio to make sure that you're not over leveraged, that your properties to the extent possible, aren't underwater every month. So some specific things in my weekly conversations that we're strategizing are for investors that are still maybe completing some rentals or they have an opportunity to do rentals, reducing the scope. So whereas before, like in a burr, we might put everything brand new appliances. Where can we save money? And rents have increased a decent amount on their own recently, so it might not even result in any lower rents if we don't put in the same amount of money into that rental. Is there expenses that we can reduce every month, especially during turnover? Definitely knocking on the doors of some tenants, and especially if you know that somebody has thought of moving in the past, just having a simple conversation as a starting point. Hey, is there something I can help with? Can I help you find another unit? Are you looking to still move on? Because then if you can take that unit back, even without doing any rentals, and get a bump in rent, that's a nice increase in cash flow there, right? And then you always, even though we kind of take for granted that we assume we've brought our properties up to the maximum and best use, there are always chances where you might be able to rent out some storage or some parking space that has been overlooked in the past when we haven't had to work hard for that cash flow. But anything's on the table these days. So just really being open-minded and strategic and looking at what are some things that maybe other people are not doing that I could apply in my properties to make sure that I can withstand this period that we're in for the next 6, 12, 24 months, however long it lasts.
Fantastic. Since you have invested in the burr strategy and you've just commented on the burr, you just mentioned that investors maybe should revisit some of the renovations that they're doing. What about these investors who are looking to exit deals by now or in the next few months expecting values to be higher and now things are softer or even lower. What can you share with these investors who are in that situation?
You know what? That's a tough one because I know many that are in that spot. And some things that I've seen, one option is if you have maybe a partner or two in your network, a joint venture partner that has been looking for a passive investment, and the numbers work on that deal where you could almost sell the property to them, take it off your books. You might have to give it to them at a below market price, at a price that is favorable to them, but and it might not make you whole, but it helps you get out of a situation that could be worse if you just hold on to that property on your own. Another strategy I've seen is actually transitioning, let's say a flip that has gone sideways and you can't sell for the price that you're hoping for, moving it into an RTO, moving it into a rent to own for 2 years, 3 years, and acknowledging that, hey, like I might not be cash flowing a big amount every month, but at least I'm getting some of that capital back in my pocket with that initial fee that you're going to collect from the tenant buyer. So once again, just looking back at some strategies that maybe haven't been used a lot in recent years because there hasn't been a need for them, and almost seeing if they work for your situation these days.
Great. Definitely can relate to thinking outside of the box. I hate this term, thinking outside of the box. I guess what I'm trying to get to is being more creative, and consider options that we may not have thought of before. Right?
Yep.
That's what you're suggesting. Um, the market ahead. Okay. Obviously, there is a lot of fear and anxiety. Every day I open up the news, there is a headline worse than the previous headline. How do you see things going forward as an investor? Do you see the environment ahead as an opportunity, or do you see it as a scary path forward? I'm curious. What are your views?
There is fear on the streets for sure, and I think we need to be careful. When I said protecting our portfolio before, you also want to protect your mind and what you're allowing to come in terms of news and headlines and some of the fear mongering as well, right? I think like to be a true investor, you are looking in all markets, whether it's a good market, a bad market, you are always looking at opportunities. So I am treading lightly right now, but still running numbers on a lot of properties. And with that said, I am asking myself, is this property going to be that like on sale for 5% less next month or in 2 months? Can I wait? Right? It's definitely a favorable time for people that have the ability just to wait and are patient right now because there's going to be some good deals. So definitely there's kind of both sides of that coin, right? You want to be careful about what you're jumping into, but you also don't want to kind of close off yourself and say, I'm not going to be buying anything for the next 6 months because I'm going to wait for the dust to settle. Because some of the best deals out there will be while the dust is still settling.
So are you still looking at numbers, or are you waiting to see how things unfold to run numbers? What I'm hearing is you're being cautious, but you're looking at numbers. Is that correct?
Yeah, I'm still walking through properties. I'm going to see a couple of multiplexes this week. It's been an interesting turn of events. Like when I would look at a 6 unit or a 10 unit come across my desk in January, February, it was hard to stomach the sales price that I was seeing, and I knew the rents were going to be low. And now I'm seeing similar opportunities, deals, and the price is a lot more reasonable. So now when I'm going back to the selling realtor, or if it's an off-market opportunity and I start asking the questions, and if there's maybe some vacant units available, I'm definitely interested. So always looking, right? I am looking, definitely being cognizant of some of the expectations of private money lenders these days and of partners and what their criteria is, because they're also fearful as well, right? If you're bringing in other people into deals, you almost want to be triple checking all of your assumptions these days. It's definitely a little bit more difficult to estimate some of the ARVs, but like I said, I think you wouldn't be a true investor unless you are always keeping your eyes open for those opportunities that are out there. Because I think the people that can take care of their portfolios and keep that debt leverage to a certain level under control in 2, 3, 4 years, they're going to be looking really strong in terms of what they've been able to build and upkeep during this gray, cloudy period that we're in the middle of right now.
Great advice, Michael. With respect to doing things differently, buying properties going forward, you did talk about being a little bit cautious, and especially if you're partnering with others and bringing money partners to the deal. What else would you recommend we do going into offers in this environment ahead?
One thing that I've typically looked at, but now it's more of a focus is only getting into deals where I know I want to hold them for, let's say, 5 to 10 years, right? We've always been on the lookout, let's say, for the odd flip or the odd wholesale, but it's an interesting market where some strategies are very difficult to apply today. It might get better in 6 months or at a future time, but today I'm looking at longer term buy and holds, right? So whether it's long-term rentals or short-term rentals, but something that I don't have a plan of flipping around in 6 months or in 12 months. I also like properties or opportunities with multiple exit options. So let's say it could work as a long-term rental, as a short-term rental, maybe even a mid-term rental. It could be a building with multiple units or just 2 units. I like so and you might also have an opportunity where it's a good purchase, a good asset that other people are interested in. If you end up maybe stabilizing it or doing the rentals, you might be able to bring a partner on the back end, right? So if it's a deal that makes sense not just to you but to others, the more options you have, the safer. So anything obviously with stronger than usual cash flow or the opportunity that isn't necessarily a long project. Like we're not looking for a big development or a long flip or a long burr that we were maybe for a year or two ago. So those are some of the things. We're in the middle of one of our final burrs right now, and we've been spending the last 2 weeks really cutting back on the budget. Like I mentioned earlier, do we need all of those pot lights? Do we need all stainless steel appliances? Can we get away with the perfectly good working white ones that are there? So really just fine tuning some of that scope and saying what's a need to have, what's a nice to have.
Love that. The need to have versus the nice to have, the long-term play. And you mentioned one more thing, which is the multiple exit strategies. I love that. We're going to shift gears for the last question. You mentioned mindset, and I'm a big fan of mindset. What are you doing right now as an investor to nurture your mind and spirit and health to stay focused and resilient and shield yourself? Not saying let's put our head in a hole and pretend nothing is happening, but what are you doing to be more resilient in this environment? Would love to hear what you're doing.
I would have to summarize it to I'm spending time on the phone, talking to the right people, and I'm shaking hands in person. I think those are the two really networking type of connecting events that keep my head where it needs to be at. On my own, personally, at home with my family, we're trying to eliminate as much noise as possible, right? We don't watch too much of the news. I want to be aware, like you said, of what's going on out there, but I don't want it to be leading and driving me in terms of decisions that I'm making and knee-jerk reactions, right? Just because other people are moving into a strategy like short-term rentals or they're doing or they're moving to the US doesn't mean that it's right for me. So I'm very clear on the direction that I'm heading in, what my risk appetite is, what I'm comfortable with. But I think just simply hanging out with humans that I resonate with, that have the same values, and doing it consistently, right? If I just did a call a month I probably wouldn't get the energy and the support that I need. But I'm talking to people like you, my power team members, making sure that those bonds are strong. And the more stories I hear, like the in the weed stories, and acknowledging that everyone's kind of struggling in different ways these days, it reminds you that you're not the only one finding it tough when interest rates go up by 3-4% in the matter of a few months, right? So definitely just bringing that human element into that keeps me on the even keel that I feel like I need to be on.
Amazing. And on your point that you're not the only one, I here sit and talk to thousands of investors, and I see everyone's story, and we're all in the same boat. We're all in the same boat, and we are finding solutions. We're finding ways. We're becoming more creative in terms of figuring out how to adapt and thrive. It's not about, okay, let's just protect ourselves here. So yeah, we're all in the same boat, and having the right support, the surrounding ourselves with the right people, I find makes a huge difference in helping us all be more resilient. So I second everything that you said.
Cannot agree more, for sure.
Michael, thank you so much. Really appreciate your time and thoughts and insights with us today.
Thanks, Dalia. This was awesome. I appreciate you having me on.
Thank you.